Alright guys, so in today's lecture we're going to concentrate on the optimal trade entry, or OTE. So what is the optimal trade entry? So the market moves in four different ways. We've got expansion, retracement, consolidation and reversal. The optimal trade entry focuses on the expansion and the retracement leg. It's an entry technique based on the retracement of a price swing. So once we see an expansion leg, we're waiting for a retracement, and how far that retracement goes is the optimal percentage area of where we look for trades. So what is the optimal trade entry levels? 62%, 70.5% and 79%. So let's put this into a more visual format. Firstly, we have a market profile that is bullish. Please refer to the market structure video if you haven't done so. So initially we see an expansion swing move higher in an underlying bullish market. We then wait for the retracement leg. We have the dealing range high and the dealing range low. We wait for the retracement leg to come into the optimal trade area. So the swing high will be 100% of the expansion move, and the swing low will be 0%. So between 100% and 0%, we have 62 to 79%. This is the optimal trade entry area that we hunt setups in. This by itself is okay, but to take this one step further, what we want to do is, on the left side of this swing, in the expansion leg, we want to look for an area opposite to the optimal trade entry area. In this area, we're looking for order blocks, fair value gaps, breakers, and mitigation blocks. We want to pair these levels with the optimal trade entry area for more higher probability setups. To take this one step further, if the expansion leg moves away from a higher time frame support level and we have a swing high to the left of it, once we see a break in market structure, you see the low, the high, we take in sell side delivery, buy side delivery, and now we have the dealing range high and low. Once we see this break in market structure, this validates the dealing range high and low and gives us the green light to wait for a retracement leg into the optimal trade entry area, and then using the left side on the expansion leg as confluence for taking an entry. So remember this example of the Australian dollar. We had the swing low taken, the swing high taken, and we now have the dealing range high and the dealing range low, so we can define the premium and the discount levels. So the swing high is at 100% and the swing low is at 0%, and obviously you're 50% in the middle. Prices come into a higher time frame support level and we've moved away from it, forming the dealing range. Now, once we're at this stage and we've seen a break in market structure, our eyes are now hunting for the optimal trade entry area. We want to wait until price comes down below the 50% area and into our optimal trade entry area. Now, price has come to our optimal trade entry area. That by itself is fine, but we want to look at higher probability setups. So we need to look at the expansion leg and look for points of interest in here that we can combine with the optimal trade entry. As we can see, we have the fair value gap. Together, the fair value gap with the optimal trade entry in a discount market, in an underlyingly bullish market, this is the ideal entry to take long positions. If we have our stop below the swing low and our take profit area above the swing high where the buy stops rest, and we take a trade at the premium end of the fair value gap, most of the time you will get a 1 to 3 at least risk to reward ratio. We don't want to take any trades above the 50% level in the premium area. Remember, when we are going long, the ideal trades will be in discount, and when going short, the ideal trades will be in your premium level. So using everything that we've learned so far, you can see how you can start fleshing out the different components of ICT concepts and building a model around it. This is like your building blocks and your foundations of learning how to trade, basically, and reading price. So I hope you guys have found this one insightful, and I'll catch you again in the next video.